Hello and welcome back to Cryptocurrency Trading Masterclass by Wealthy Education. In this video, we'll talk about how to trade based upon Bollinger Bands. Now, Bollinger Bands are a very common indicator used in various markets around the world. Pretty straightforward. Really, all they do is they measure volatility to give you an idea whether a cryptocurrency or an asset in general is overbought or oversold. It's based upon, if you remember statistics, 2 standard deviations from the mean. So basically the idea is off the top of my head, 97-ish% of all numbers fall within this distribution. And then once you get outside of this range, the idea is much more likely for the market to return closer to the median. So if you remember the bell curve, pretty straightforward, and it is not a difficult indicator to use. There are multiple different strategies though. So come up here to the indicators and strategies button, and you can see on the built-ins, it's actually right away. You can see Bollinger Bands. You click on that, and you'll notice, let me go ahead and zoom in a little bit. You'll notice that at least on TradingView, it is filled in. Sometimes it'll just be 3 lines, and you can change it to that if you would like. That's fine. But this is 2 standard deviations, meaning that it is more than twice as far from the middle line, the average, than is typical. This means that you are 2 standard deviations lower than the line as is typical. So this is a reversion to the mean type of scenario. The middle line is the 20 simple moving average. So it's the average price of the last 20 periods, in this case, last 20 hours. Now, when you look at this, there are a few things that you should notice, and I will go ahead and switch over to like a bar chart. So prices actually went this high, but they closed here, and we'll talk about that a little later. But the idea is you can see the price had reached above the top. And the idea is that you are more than 2 standard deviations above, and you should go back towards norm. The same thing can be said here. You are 2 standard deviations below, and you should go back towards the norm. Now, something to pay attention to is the moving average, the norm, as it were. When it's going basically sideways, that means you don't really have a trend. You're just kind of killing time. But when it starts falling like this, you are in a downtrend, just as you are in an uptrend here and here. So in that scenario, the easiest way to trade this is to simply use this as to which direction to go, recognizing that once you get outside of the bands, you are likely to have a pullback. There are a couple of different ways that people will use this. That's the most kind of like just straightforward explanation of it. But sometimes they will use the trend right along with the median to determine what to do next. So for example, we have a downtrend here, and you can see the price falls and falls. It gets a little overdone and we bounce. So if the trend is down and we're right here at average pricing, you are looking to sell if you're a little bit more aggressive. Sometimes price might even jump up to here in a downtrend, and you are definitely looking to sell at that point. So that's the simplest way to talk about how to use Bollinger Bands. It just tells you when the market's gotten too far in one direction, especially when it's against the overall prevailing trend. Then you become very interested in it. Notice how the standard deviations are farther away here than they are here, and that's just a sign of volatility, whether the markets are moving. You know, if they're just killing time, it gets slimmer You can see we shot straight up in the air, and then they expand because the moving average starts to rise, and it starts to be influenced by this outsized trading hour. So notice how you're in an uptrend, you get overdone, you can buy at the moving average in the middle. Also, notice how we break through here, we come up and we test this, and then we fail again. That could be a sign that the trend's about to change, and it did in fact do so. And then there's your other entry. So when I talked about being in a downtrend and selling here, that made perfect sense. Just as collecting profits might once you get outside of the Bollinger Band. But notice how if you took these trades to the upside, you may have lost money there because it didn't return. It just kind of depends on when you get in. But the fact that we failed there is a huge sign that something's changing. And therefore, the trend did exactly that. So that's a way that you can certainly take a look at it, as support and resistance. It's a dynamic support and resistance level. It operates the same way on all time frames. I would postulate that, on the daily charts, it tends to be a little easier than, say, the 5-minute chart. Once we start talking about candlesticks, this is a perfect setup. Got a little overbought. We're definitely in an uptrend. We pull back. We form what is a buy signal on the candlestick a little later in the course and go higher. We break through it. And then we finally make a decision. And once we make a decision, we're in a downtrend. So that is a way to look at it. So let's go ahead and take a look at Ripple. And let's put Bollinger Bands on this. See how wild it can get? That's because the market is wild. And now we have calmed back down. A lot of times that's a news-driven event. So that's something to keep in mind as well. You can trade inside the bands. Okay, so let's take a look at this. Let's drill down to maybe the 15-minute chart. You can buy and sell. So if you are flat, and this is going to be for those who are like day trading, Okay, so notice that we're essentially flat here. You could buy, sell, or sell, buy, sell, buy, sell, buy. A lot of that's going to come down to the spreads that you get and the like, but you get the idea. Might be difficult to do in a penny range here with Ripple specifically, but with a coin like a Litecoin or a Bitcoin or whatever, it would become much simpler. You do have to keep in mind, though, that if you're in a longer term downtrend, for example, your selling positions will probably work out better, and then eventually you'll probably break to the downside. So you might go back and forth and lose one, but you might win 4 is kind of the point. So again, this is back and forth. You can see how well that worked when the bands tighten up and then they start to open up again in distance, and that tells you that you're in the midst of a move. Let's take a look at Cardano. Put our Bollinger Bands on. And like I said, depending on the platform you use, and we like TradingView, but I recognize that not everybody is going to use TradingView. So you could do the background all the way to 0. And then you'll notice that it's just 3 lines. A lot of platforms actually do this. It's a little easier to see what's going on the inside. But you can see clearly that Cardano started to break above and then kind of drifted because it got a little ahead of itself. Notice this here. This is a Bollinger Band squeeze. And Bollinger Band squeezes a lot of times will precede some type of bigger move. I mean, a market will only sit still for so long, and we actually talk about this later in the course. But, the skinny of it is it starts to lose volatility, and then once it gets moving, you've changed directions. You have formed a trend. Multiple times you could have bought this right along the average price, all the way up until here, where you finally probably got stopped out. For what it's worth, when you see this, and this hasn't completely closed yet. This is an hourly chart, and as I record this, it's got about 15 minutes left. But if it starts to roll over here, that might be the beginning of a short-term downtrend. So that's something worth paying attention to as well. Now, the thing that I would point out, that move that I talked about, is in the presence of a higher time frame uptrend. So again, that's really the way you want to be as well. So Bollinger Bands are like a nice little guideline. They adjust, meaning that we see them widen and shrink. The fact that we are overbought doesn't necessarily mean you need to be shorting it in an uptrend. It just tells you that you may get a pullback or a consolidation in this case going forward. So you can either take profit, do partial profit, and then perhaps wait for another opportunity to get involved like you could have several times here. In the next video, we'll take a look at some examples, how to actually use Bollinger Bands to place some trades with a little bit more clarity.